Have you ever looked at a stock chart and thought, why is this price going crazy? One day it's up 10%, the next day it tanks. What's really going on behind the scenes? Is it just luck? Or is there a method to this madness? Today, we uncovering the real forces that cause stock prices to rise and fall. And once you understand them, you'll never watch the market the same way again. Hey everyone, welcome back to Mauuak Saving Tips, where we simplify the world of investing for beginners. In this video, we tackling one of the biggest questions in the stock market. What causes stock prices to go up or down? Whether you're just getting started or trying to make sense of daily headlines, this video will break it down in a clear, beginner-friendly way. Make sure you watch till the end, because we'll also walk through a real-world example using a well-known stock. Let's start with the foundation of all price movements, supply and demand. Simple economics. When more people want to buy a stock than sell it, the price goes up. When more people want to sell than buy, the price goes down. But what makes people want to buy or sell in the first place? That's where the deeper layers come in. Let's peel back those layers one by one. One major driver is a company's financial performance. Ask yourself, is the company making money? Are their earnings growing? Are they launching new products or expanding globally? When a company posts strong earnings, investors get excited. They buy in and the stock price rises. But if earnings miss expectations, panic selling can begin. So, the next time you hear the term earnings season, know that it's a critical time when stock prices can swing wildly. Here's a question. Can one tweet crash a stock? Absolutely. News and public sentiment have huge influence over stock prices. Positive press, analyst upgrades, or even a CEO making bold claims can trigger a buying spree. On the flip side, scandals, lawsuits, or poor media coverage can trigger fear, and stock prices can plummet within minutes. It's not always about logic. Sometimes it's about perception. Next, zoom out from individual companies. Think about the overall economy. Do rising interest rates, high inflation, or unemployment reports influence the stock market? You bet they do. When inflation rises, consumers spend less. When interest rates go up, borrowing gets expensive for both companies and consumers. These broader economic signals cause large-scale shifts in stock prices, often across the entire market. Let me ask you this. Have you ever made a money decision based on fear? Or chased a stock because everyone else was talking about it? You're not alone. The stock market runs on emotions, and two of the biggest ones are fear and greed. Fear causes selling, greed causes buying, panic sells and hype buys. Sometimes irrationally. That's why some traders say the market is driven by crowd psychology, not facts. You might be wondering, do regular people like us move the markets? Not usually. Big players like hedge funds, mutual funds, banks known as institutional investors, move millions in a single trade. When they enter or exit a position, it creates ripples, or even waves, that impact stock prices. Tracking their moves can give clues to upcoming trends. Let's bring it all together with a quick example. Take Tesla. When Tesla reported better than expected profits last year, its stock soared. Why? Solid fundamentals and investor excitement. But a few months later, Elon Musk made headlines with controversial tweets, and the stock dropped. Add in fears of rising interest rates, boom, volatility hits. One company, multiple price drivers. That's how it works in real time. So, let's sum this up. Stock prices go up or down because of supply and demand, which are influenced by company fundamentals, news and sentiment, economic indicators, human psychology. Big institutional investors, once you recognize these moving parts, the market starts making more sense. And the best part, you become a smarter, more confident investor. If you learned something new today, hit that like button and subscribe for more beginner-friendly investing tips. Have a question? Or want us to break down another stock? Drop it in the comments. And Dan, too. Forget to watch our next video. How to build your first stock portfolio. Thanks for watching, and keep investing smart.